Jes Delos Santos. Let's have a look at how the local bars closed today, Thursday rather. Okay, investors putting the brakes on the local rally here. That's after Philippine stocks reached its highest since March 12 to 6,651, propelled by a three-day rally. We did see that yesterday, of course, but the index today snaps out of that series, sliding today by 1.6% to 6,545.17. Jonathan Ravelas of BDO says the market is vulnerable to sell-offs given the lack of earnings surprises and a big drop in infections as well. He tells Bloomberg that given the lack of conviction, a rally beyond 6,700 cannot be sustained, and the shares will just probably test the 6,300 level so far over the past 4 days. The index still above by 1.6%. Let's see if that if the sell-off will continue tomorrow, or at least local shares can manage to at least recover from today's sell-off. But still sparking some confidence here, you have BSP Governor Ben Jokno telling Bloomberg TV that current policy environment is appropriate for the economy. He thinks there's no need at this stage for any drastic moves to inject more liquidity or fiscal stimulus into the system, but he did lower his outlook for full year growth, now forecasting a 6 to 7% growth, lower than the official target of 6.5 to 7.5%. Still on the economic front as well, you have trade figures coming out this morning. Deficit at its smallest in 3 months at $2.29 billion, but still wider by 16.5% year on year. That, of course, as imports rose by 2.7% to $7.6 billion, while exports contracted by 2.3% to $5.3 billion. Now, from there, let's move back to local stocks here. The sell-off pretty much evident here in how specific stocks performed here. Majority of the main index, 21 members to be exact, ending the day in the negative territory. SM Investments and its property unit, SM Prime Holdings, losing the most here. As you can see, SM Prime down close to 3.4%, now at 35 pesos and 60 centavos. On the other hand, SM Investments also inching lower by 3.3%, now at 965 a piece. Also, as you can see, Jollibee ending the day lower here, 3.1%, its biggest slide yet since March 19. The stock also declaring a 78 centavo per share dividend here. Of the 30-member index, only 4 stocks managed to end the day in the green. Very notably so, you have our best performer, URC, up by 1.4%. URC right now priced at 142 pesos a piece. But let's zero in on one particular stock here. Pilipinas Shell, the oil refiner, is planning to earmark as much as 20 billion pesos, that's 15 to 20 billion pesos in the next 5 years, to construct import terminals and mobility sites. First, on the new terminals, that is going to help enhance or boost their supply chain in the country. As for mobility sites, what is it exactly? Well, these are just basically their fuel stations, which will be converted or will transition to mobility sites that are actually going to offer more services for their customers. The goal is to open 60 to 80 stations per year. But despite those expansion plans here, Shell today joining the sell-off in the local bourse, slumping by as much as 1.7%, now priced in at 20 pesos and 15 centavos a share. Here are other headlines we're keeping our eyes on. Meralco is hiking power rates this month after 2 consecutive months of reductions. Meralco attributes the higher generation costs to rising demand and increasing spot market prices at the West M. The power distributor is increasing its household rate in April to 8 pesos and 4 centavos per kilowatt hour from the previous 8 pesos and 3 centavos per kilowatt hour. That's equivalent to an additional 17 pesos in the total bill of residential customers consuming 200 kilowatts per hour. Aside from warmer temperatures, Meralco said peak demand in Luzon increased by more than 900 megawatts in March as power plants with generating capacities of around 3,400 megawatts continue to be offline. The Trade Department says the economy cannot afford to go on another ECQ extension, citing its impact on the business community. Speaking on agenda here on One News this morning, Trade Secretary Mon Lopez said the economy was already recovering before the ECQ bubble, but they are now expecting slower growth due to heightened restrictions. Lopez notes that the gravely affected businesses in the NCR Plus, especially those that are labor intensive. Lopez says new quarantine restrictions may force more businesses from hardest hit sectors like tourism and hospitality to slow down their operations or ultimately shut down. The Trade Secretary added that the travel industry was seriously damaged by stricter quarantine restrictions as well as the emergence of new variants. Just how badly hit was the tourism sector after ECQ was reimposed in the NCR Plus bubble and restrictions heightened in other parts of the country? To discuss that, we have Tourism Undersecretary Benito Bengzon. Good afternoon, Usec Bengzon.
Good afternoon, Jes, and thanks for having me in your program.
Okay, just to take up from what Trade Secretary Mon Lopez said on agenda, just how bad was the sector affected after lockdowns were put back in place?
We have to remember that Manila or NCR is still the largest source market when it comes to domestic tourism. So the travelers from Manila are the ones who are helping to fill up the rooms, the airline seats all over the Philippines. So with the shifting of the quarantine status of NCR Plus from GCQ to ECQ, obviously there has been an effect on the outside of NCR. But we're quite confident that once the restrictions are lifted, tourism will be able to recover fast enough, as it has demonstrated last year when we shifted from ECQ to MECQ and then eventually to GCQ.
Can you give us more specifics, nuance those statements for us a bit more here? Do you have the number of establishments or business segments that were forced to close, or how much of a revenue loss are you expecting due to the imposition of ECQ?
Well, we haven't done any computations yet on the impact of the shifting of NCR Plus from GCQ to ECQ. But maybe just to give you an idea of how we were impacted last year. Inbound tourism suffered a decrease of about 82%. We had a revenue of about 482 billion pesos in 2019. This went down to 82 billion pesos last year because, of course, the entry of foreign visitors was still restricted. With respect to domestic tourism, in 2019, we generated over 3 trillion pesos, and by our initial estimates, revenue went down by about 50%. But I think moving forward, the key to recovery will really be to focus on domestic tourism and to make sure that we provide as many viable options to Filipinos who want to move around. Of course, this is anchored on making sure that the health and safety protocols are all in place in the destinations that are planning or that have opened up.
Okay, attributing to what you said earlier as well, you were saying that there's somehow an improvement already in domestic tourism prior to the reimposition of ECQ. Was there a notable increase in revenues for the tourism sector prior to ECQ being put back in place?
We started to reopen domestic destinations in October of last year. We started with Boracay, then some destinations in Region 1 opened. And since then, the number of destinations that have safely reopened has gone up steadily. So this is good news because it has now, as I mentioned, provide a lot of opportunities for Filipinos to move around. But I think more importantly, it provides a lifeline to tourism enterprises that have been severely hit by the pandemic and whose revenue streams have been affected. And more importantly, this has also provided an opportunity for the displaced workers to get back their jobs and earn income, especially at the community level. So this is going to be the thrust of the Department of Tourism, as instructed by Secretary Bernard Romulo Puyat, we will be focusing on domestic tourism. But the efforts will not only be centered on ensuring that health and safety protocols are in place. We also have to make sure that we continue to capacitate partners. We still conduct regularly different training programs in the areas of destination management, branding, organizing events on the virtual platform. So it's an integrated approach, and we're quite confident that, again, when the restrictions are lifted, then we can resume with our efforts as far as domestic tourism is concerned.
Okay, interesting that you mentioned that the main thrust still is domestic tourism, because Secretary Romulo Puyat herself also mentioned that the hope is to actually reinstate international travel as well, or resume international travel. Is that a wise thing to do now, seeing the surge in COVID-19 cases as well as the spread of COVID-19 variants?
Now, we will leave it up to the IATF to determine when would be the best time to reopen our borders to inbound leisure tourists. On the part of the DOT, what we're doing is developing models that will allow movement eventually from abroad to the different destinations here in the Philippines under a travel bubble concept. So I think what we want to just impress upon the general public and the stakeholders is that we're able to put all these health and safety protocols in place to make sure that any efforts to reopen destinations will be done in a safe and sustainable manner.
Do you have markets in mind for that travel bubble?
The interest has so far come from the short-haul markets, particularly Northeast Asia. But this is something that we will have to work on, moving forward. But there's been a lot of interest expressed by our travel trade partners from Korea, Japan, and China. And many of them have expressed their interest to bring their tourists to our resort destinations when the borders are reopened.
What specific resort destinations here is piquing their interest at least?
The ones that have been mentioned include Boracay, Bohol, and Palawan. So, of course, there are a lot more options available here in the Philippines, but this is something that we will have to pilot, test, make sure that we are able to debug the whole customer journey to make sure that it is seamless. But we're quite confident that we can do it because all the health and safety protocols in all the critical touch points have already been provided for under the guidelines that we have crafted in the DOT.
So it's safe to say that there is an appetite for international travelers to actually visit the country. And when do you see this happening? Do you have a specific timeline in mind?
It's very difficult to come up with a specific timeline because this will, while the appetite is there, we have to take note of two things. Number one is that there are restrictions on the outbound market coming from the respective governments, and on the part of the receiving country or receiving destination, which is the Philippines, of course, as entry of foreign tourists, leisure in particular, is still restricted. But what is important is the appetite is still there. A lot of interest has been manifested by our partners in the course of our B2B or business-to-business sessions, in the course of our marketing promotions, which continue even while we are under an ECQ at the moment.
Okay, lastly now, Usec Bengzon, what are your growth projections for the tourism sector in the near term, in the first quarter at least?
Well, we foresee that domestic tourism will recover faster than foreign tourism. And this will be dependent, of course, on the removal of the restrictions, particularly out of NCR Plus, which is still the major source market for the Philippines. Worldwide, the United Nations World Tourism Organization has in its latest report, has given a forecast in a way that global tourism will go back to pre-pandemic levels by 2023 at the earliest.
But do you see that happening for the Philippines?
Well, in the case of the Philippines, of course, we remain optimistic that first, we have a huge domestic tourism base, which will be able to tide us over and also help the enterprises. In 2019, we had 110 million domestic trips. So even while it might take some time for international travel to resume here in the Philippines, it will really be domestic tourism market that will keep many of these enterprises afloat. But with respect to opening our borders, again, we defer to the authorities, particularly the IATF.
All right, thank you very much for your time this afternoon, Tourism Undersecretary Benito Bengzon.
Thank you.
And those are the biggest news this trading day, April 8, 2021. Catch Business World live again tomorrow at 9:30 a.m. and 3:15 p.m. I'm Jes Delos Santos. BR1 News, mask on, wash hands, and stay safe, Philippines.